Thank you much, and thank you for warm welcome and lengthy introduction of myself. Uh, Please allow me to introduce myself one more time. I'm Sung-Jin Park. I'm glad to meet you here, although virtually. So it's my honor to have a chance to talk with you at the forefront of managing public money in your own jurisdictions. And as you can see from the screen, the slide, we are about to talk about financial reporting of service delivery. We're going to talk about performance, right? And a moderator already emphasized about the importance of this communication of performance, especially in public sector. No wonder because in private sector, we don't have to worry about communicating performance because stock price change or profit generated, those are a clear indicator of performance. But in case of public sector entities and government entities, we have to carefully select what to explain, what to disclose in terms of performance. And from that angle, I hope this presentation gave you a certain idea or a little bit of idea of where to start and how to package your own performance reporting framework in your own jurisdictions. Next slide, please. And before we get into the main business, please allow me to introduce briefly about where I'm engaged with recently. The IPSASB, International Public Sector Accounting Standard Board. I believe many of you are already well aware of the board and what they're doing. But actually, the board is actually headquartered in Toronto, Canada. So the picture you're seeing, that's actually where the headquarter office is located. And IPSASB is one of the global public sector standard setter. And currently, IPSAS suite include 39 accrual-based international public sector accounting standard and also have three recommended practice guidelines. We call these as RPGs. Actually, the moderator just mentioned that we'll talk about one new standard about uh, performance reporting, but actually this is not standard, but it is part of recommended practice guidelines. So I'm going to elaborate a little more about that nuance difference as we moved on. But importantly, the ECSB is currently working very hard to push forward a climate-related disclosure standard setting. As of now, that climate-related disclosure standard is in exposure draft stage, but next month, actually in about 2 weeks, that exposure draft will become official standard. So we will have a climate-related reporting standard for public sector entities. So please stay tuned. And one of the things I want to highlight about HSB is HSB is very inclusive and open and transparent. And so its standard setting process follows open and transparent due process. Also, it is oversighted with independent body, Public Interest Committee, PIC, is consists of four committee members, one from IMF, one from Intosai, and one from OECD, and the last one from World Bank. So all of international organizations interest in fostering financial information, precise, well-measured financial information, and believers of importance of communicating those financial information is the one oversighting our activities. So you can put a little more trust on what IPSASB is doing, and also IPSASB is diverse. The board itself is very diverse. I have 18 members, as you can see. Me from Korea is one of the member, and another member from Japan, Malaysia. So Asian member countries also well represented. And the board is and IPSASB board is actually supported by IFAG, ADB, World Bank, and Canada and New Zealand government. Next slide, please. So why there is another standard setter for public sector? Because public sector is unique. Public sector is distinct from private sector, private sector, different from corporations, right? So that's why IPSASB relies on conceptual framework customized for public sector context. So IPSASB has its own conceptual framework for standard setting, suited for public sector context. Even though this IPSASB conceptual framework is non-authoritative, so it is not actually part of standard, but all of standard setting is actually guided by this framework. When I say standard setting, financial reporting standard setting, and also sustainability related standard setting also. So you will hear more about sustainability related standard setting issues as time goes by. Next slide, please. So those are what is IPSASB and how IPSASB is actually working to create a public sector accounting standard. Then what are they doing now and what is on their agenda in the coming future, in the near future? So IPSASB has a 2024 and 28 work program. So this is kind of plan for coming couple years of activities. And when SSBs come up with this kind of work program strategy and work program, we always heavily seek advice and get some comment to incorporate as many of feedbacks and comments and suggestions from the stakeholders, like you in your own jurisdictions. And as you can see, IPSASB is working on mainly two fronts. So the upper half of the circle, public sector financial reporting and public sector sustainable reporting standard. Standard setting is one of the key activities IPSASB is doing, and actually in the work program for coming couple of years. Not only that, as you can see, the bottom half of the circle, IPSASB is heavily working on promoting and adopting implementation of accrual basis accounting standard for public sector entities, and also advocating benefit of financial and sustainable reporting information. So ultimately, all of these are like means to an end. The end is strengthen public financial management and sustainable development globally. How? Through increasing adoption and implementation of quality information enabled by accrual basis accounting standard that IPSAS is trying to generate and maintain. Next slide, please. And this is next slide, please. And this is our view. Why IPSAS accounting standard is important and how it can actually play a role in strengthening public financial management, PFM. As we can see from the figure on the left-hand side, we believe that to let government operation work effectively and efficiently, obviously it should play within the good boundary of policy and well supported by the budget. But those budgets and those policy programs doesn't work in vacuum because all those things work in certain institutions, certain system. And to let the system works and operate as intended, it requires information, quality information. Quality information is provided by accrual-based accounting standard, like IPSAS in this context. And also, when such a country is trying to assess its own kind of activity and its own kind of performance in their own fiscal management, they want to compare their own operation, their own activity with other countries. For that kind of cross-sectional or cross-country comparison, there should be one international standard. That's why there is Government Finance Statistics, GFS. And those GFS is also based on accrual-based information. So that's why accrual-based micro accounting in IPSAS and accrual-based macro accounting of GFSM can go hand in hand to provide better information, more quality information to strengthen the way public financial management actually operates. And nowadays, we are trying to branching out to a different dimension of a government operation, which is about protecting or fostering more sustainable development. Many of government interventions through policy programs supported by budget and also making commitment with other countries or within a country. All those commitment and policy programs also requires information. For example, in case of climate change, people and government units or other countries, international organizations want to know where's those gas emission is coming from, what is the trend, who's emitting more, who's trying to cut back more. All those information to monitor and to understand current status of climate change and greenhouse gas emission also requires information. And that's why this framework of reporting framework for sustainability is also have a potential to uh, strengthen the way the entire system works as intended. So that's where the IPSAS actually comes in play to strengthen PFM and also foster sustainable development. Next slide, please. So what I just explained so far, if I draw a picture to explain how all those are connected, we can take a look at this kind of figure. So this is like a building a house. So everybody need protection when you go into a house, into home. So a roof at the cover, public financial management system should be there to protect sustainability, financial sustainability, and also social sustainability. Sustainable development also need protection from the strong PFM system. But those cannot be sustained without strong foundation, robust pillars supporting those structure. So at the root level, IPSAS standard will work to generate well-measured, verifiable, and comparable information, comparable data for all of activities. And those information can be applied for PFM, can be applied for more sustainability related policy activities or other social or government-owned operation as well to enable more streamlined communication and circulation of those information. The chart of account can be crafted actually as a multi-dimensional chart of account, more comprehensive multi-dimensional chart of account, connecting financial information, sustainability related information, things like that in one cohesive system will become a strong foundation and support those financial sustainability and more sustainable development through policy activities, through government statistics, allowing cross-country comparison, and also communication of financial performance and with financial and non-financial information. So this figure is intended to draw that kind of picture, how those elements are actually interconnected. I hope this conveys a specific meaning for you guys. Uh, Next slide, please. Having these as background, now it's time to talk a little more about the main theme of this session, the financial information and reporting. So how IPSAS actually plays in this field of financial reporting. As I just mentioned, effective service delivery can be enabled by strong PFM. When I say strong PFM, it is more stronger control involved, and also communication of information is also involved. So without adequate uh, information, is in this case financial resource and financial disclosure, public sector entities cannot actually effectively deliver service because they cannot monitor their own activities, their own operation. They cannot plan ahead because they don't have enough information to plan ahead, plan for resource mobilization or management of a workload, things like that, right? So that's why IPSAS actually can contribute in strengthening PFM system. And IPSAS financial and subset reporting data is actually needed for transparency, accountability, and also decision making. So these are main goals, the IPSAS main area IPSASB is trying to contribute by providing quality information. To make it simple, the foundation of strong PFM is good information for decision, including financial decision. So this is the kind of the gist of the message. So we can talk about a little more details with in following slides. So next slide, please. So service performance. Before getting there, I believe some of you or many of you already heard about two actual standards. IPSAS standard 22 and 24. These are the way to link accounting information for decision making. So IPSAS 22, disclosure of financial information about the general government sector, and IPSAS 24, presentation of budget information in financial statements. These are less conventional accounting standard. These are more public sector unique kind of standard. So these are the one introduced to link pure accounting information to the way financial management or budget management is done in the public sector. So let's take a look at IPSAS 22 first, disclosure of financial information about the general government sector. Uh, in case of private sector accounting standard, in corporate accounting, and also the same concept is actually applied in public sector accounting as well. The underlying assumption is entire accounting system is built based on the concept of entity, right? So we assume a certain boundary of organization or boundary as an entity, and try to report things happen within the boundary of that entity. And all of the resources reported through financial reporting system are the one owned or controlled by that entity. So when a certain entity control other entity, when that entity prepare its own financial statement, based on accounting standard, we are supposed to consolidate the controlled entity in the reporting of the mother entity. So that's why there's a consolidated financial statement. So that's norm in private sector. But in case of public sector, in case of government, may have to report things happen on other entity, not controlled by government, but somehow receive taxpayers' money. For example, if we provide a large amount of subsidy to support an operation of non-profit organization in rural area providing senior welfare service, so taxpayers' money is actually provided. Government have a responsibility to monitor and check what's going on there for accountability purpose. But based on accounting standard, the government cannot actually, it does not control that outside entity, so cannot consolidate it, right? What about local government? Central government provide large amount of taxpayers' money to support local government activities, but let's say in federal system, local governments have its own authority, so central government does not control the local government. Then central government cannot actually consolidate uh, the financial statement. But from taxpayers' point of view, maybe it is necessary to draw one comprehensive picture covering both of central and local government. So for that kind of context, IPSAS 22 comes in. So in this case, financial information can be provided for general government sector, even without consolidating a financial statement.
Uh, the, 10
So in
minutes.
IPSAS 22, it clearly says that this is optional. Not everybody, not all entities, not all government entities have to do it, but if there's a need, so if the entity decide to actually implement IPSAS 22, then do it in this way kind of things. And this is the one applied to the entity have consolidated financial statement based on accrual based accounting standard. The point of IPSAS 22 is about reconciliation. So consolidate financial statement numbers should be reconciled to the general government sector GGS based financial information, and also those information should be reconciled to upper level, more aggregate level of statistical reporting, either based on SNA or based on GFSM. So those kind of statistical reporting information and actual information in general government sector level should be reconciled. That's a requirement in IPSAS 22. What about IPSAS 2024? Presentation of budget information in financial statement. This is about comparison between budgeted information and actual information on the budget side. So when those budget information are going to be presented in financial statement, then follow IPSAS 24. Key point of IPSAS 24, make those numbers, budget number and actual number. The budget is prepared based on cash basis, and let's say financial statement prepared on accrual basis. When we put actual numbers from financial statement and budget cash-based budget numbers right next to each other, those numbers are not directly comparable. So what IPSAS 24 says is, in that case, when you are trying to put budget information in financial statement, at least make those numbers comparable. So put them on the same basis. Reconcile the difference between actual amount and in budget and actual amount in financial statement by straightening up of a time period or measurement boundary, things like that. So all the details guidelines in it are listed in IPSAS 24. So if we take a look at these two all at once, as you can see from the boxes on the right-hand side, IPSAS 24 is about budget and actual amount. Make those numbers reconcilable. IPSAS 22 is more about relationship between actual amount and more aggregate level of statistical report to make those two numbers more comparable. So that's kind of big picture. Next slide, please. Then let's think about recommended practice guideline number 3, reporting service performance information. So this is the main theme for this session, right? So, okay, we got that. So first two IPSAS standard about, those are about using information, financial information coming from budget, coming from financial statement. So how we can actually more effectively, more efficiently use those information from two different sources. As long as government entity follow those standard, it's at 22 and 24, that process of using financial information will be more streamlined. 53 is about reporting performance of a service delivery. Then why it is important, why it matters to report service performance to the citizens? Because there's big demand, because there's big push, big pressure about reporting what is actually done by government, what is actually achieved by government, what kind of results made through the spending taxpayers' money, results, outcome made through expanding all those budgeted government resources. So citizens requires it. Parliament actually asks for it. Civil society also demand those information. So have to provide service performance information mainly for accountability purpose. And also, theoretically, this kind of a push for results or push for performance is actually driven by a series of government reform initiatives based on the new public management ideas, which actually emphasize result and performance rather than process and value. And along with this kind of a trend in government innovation and improvement, performance-based budgeting or performance-informed budgeting also gained momentum over the last couple of decades, which also requires more performance-related information. That's where the demand is coming from. That's why it is worthwhile to think of the better way to provide, better way to deliver this service performance information to our stakeholders, to our citizens. Then what is RPG3? Again, this is recommended practice guideline. So this is not standard. So you can think of this as kind of summary of best practice. Actually, as a matter of fact, the RPG3 is actually made based on survey of the best practice of service performance reporting of many different countries and many different organizations. And RPG3 actually provide the key essence of those best practices. Again, this is non-mandatory, but this is pretty decent presentation framework. So you can, so it's strongly recommended all of you at least take a look how this framework is actually structured. So RPG3 is about mainly five things. First, which services are provided? Well, provided, or more precisely, which service performance you want to report. Because in financial accounting, there's a notion of concept of materiality. So you know which information will be disclosed, right? Material information will be included in financial statement. But in case of service performance delivery reporting, you have to select which service performance you're gonna report. So guideline for selecting what to report. Number one, RPG3. Number two is about why services are provided. So it focused on objectives of service delivery and also how much resources used. So RPG3 also clarified that it is important to disclose input or cost of those service delivery. And fourth dimension, what is actually delivered. So what is the output? And last mention, what effect or what impact it generated on the society, on the community. So what is, in other words, what is outcome? How about efficiency and effectiveness? These are the key concepts and key words explained in RPG3 to structure this presentation framework for service performance to our citizens. So those three boxes from the last slide can be expanded by including one more box in this figure. So it says 24 is between a reconciliation between budgeted information and actual, and it says 22 is about actual numbers to more aggregate statistical reporting. Performance RPG3 is about linking budget information to actually performance information. So what is so input is budget, output or outcome performance. So how to report this kind of activities? RPG3 is you general a representation framework. Next.
5 more minutes, Dr. Park. Thank you.
Okay. Well, I'll finish up quickly. Anyway, so I highlighted an important aspect of RPG3 reporting service performance information. So key concept is performance objective. Performance objective is general description of what is planned result. So starting from plan and then actually deploy resources as an input and measure what is actually generated, produced output, and what is actual achievement. What is how much of achievement is made compared to what was planned. So that's outcome or impact. So those kind of input, output, outcome, efficiency, and effectiveness related performance indicators are the one used for service performance report. And RPG3 explains the concept of those five performance indicators and how to integrate those five performance indicators in a comprehensive and cohesive way in the report. Next slide, please. To sum up those standards, so IPSAS 24 about budget information and RPG3 about performance information, those are more closely aligned. Obviously, those two touch the different grounds. IPSAS 24 is about budget versus actual. So that's why it focuses on reconciliation of variance. This much is what was planned, and this is much is what actually happened. Why this difference? Why this variance happened? Explaining that variance is important information in IPSAS 24, but in case of RPG3, it's about reporting whatever is actually done well. So for that performance, something done well, what was the input? So what was the output? So what is that outcome coming from all those activities? So a selection of performance indicator and provide information for the cost of those service delivery is key aspect of RPG3. And unique aspect from RPG3 is it heavily relies on the use of not only quantitative but qualitative information as well. But all at one, but at the end of the day, it's at 24 RPG3. All of them are trying to achieve the same goal: integrate budget information and performance information, linking through the cohesive accounting system, financial reporting system. What we can see from next slide is kind of exact. Next slide, please. Examples of those reports. The first one is of IPSAS 24. So how the budget information can be actually reported, can be disclosed in financial report, a financial statement. So IPSAS 22, IPSAS 24 actually allows two different approach. You can prepare a separate report. As you can see from left-hand side, separate report. In this case, the report name is budget and cash basis um, report clarification. Well, title is actually eliminated here, but anyway, this is one way of providing that reconciliation between budgeted information and actual information, and disclosed in a separate document. But right hand side is different approach. In the financial statement, that budget information actually added as additional column. So in the far right corner, um, the difference between original budget and actual is actually added to provide equivalent information to the one provided in the separate report. Which format is used is uh, up to you or up to each jurisdiction. The point is, try to make those budget information and actual numbers become more comparable from financial statement users or financial information users' point of view. Unfortunately, this RPG3 it has not been officially adopted by any country yet, and no, not surprising because this is recommended practice guidelines. So it is designed to give an idea or to promote more effective communication of service performance information. But some countries actually um, not officially adopt, but actually uh, follow the spirit of this RPG3. So if you go to the next slide, I'm gonna introduce the case of Korean government. So actually, don't please don't get me wrong. Don't get me wrong. Korean government has not explicitly adopted RPG3, but based on the way service performance report is actually prepared and distributed to citizens, is actually pretty closely aligned with what is recommended in RPG 3. First, what do I mean by that? First, this performance information is directly connected to the financial information. So I know there's a language challenge for many of you, but what you can see from the left-hand side, this is front cover a cover page of a Korean government annual report, and in the index of the annual report, there I highlighted I boxed two area. Chapter 3 is the financial statement, left left hand side at the bottom, and right hand side of the top, the red box is about service performance report followed by financial statement. So performance information and financial statement information provided right next to each other. So that's one close alignment with what is recommended in RPG 3 and what is actually done by Korean government. So when you actually take a look at one report, as an example, I just pick up Ministry of Economy and Finance performance report. Next slide, please. As you can see, Ministry of Economy and Finance service performance report clearly shows that what is their mission, what is their vision, and what is their planned result. Well, the mission and vision is little different from the objectives of the service performance delivery, because mission and vision is more sticky, is is actually lies at the organization level. As long as the organization stays there, mission and vision stay with the organization. But objectives is more specific to a specific context, specific activities, or specific service delivery, right? Even though objective is not clearly articulated here, but when we moved on to following pages of the report, next slide, please, you can see that actual budget allocation to specific policy programs. So left hand side figure table is budget allocation to policy programs as an input, and on the right hand side there is performance indicator information as an output. So Korean government's performance report, service performance report, provide all those key elements of RPG 3. What is input? What is output? And outcome or planned result is also there. So even though those informations are scattered a little bit, not as closely tied up as recommended by RPG 3, but a little bit crude, but all those necessary information recommended by RPG 3 is actually reflected in the way Korean government actually communicate with all citizens about their own service delivery performance. I believe you can find similar practices in many other advanced countries and even your countries as well. So what you can do at this stage is, after reviewing RPG 3, please try to revisit your own reporting practice of the service delivery performance. And if you can learn something out of RPG 3's recommendation, innovate or improve your own practice. I think that can be a good takeaway from this session. Next slide, please. And one thing I want to just add before I wrap things up is this RPG 3 is actually recently updated to reflect sustainability related program information as well. So in RPG 3, now we add a couple of uh, concrete examples, illustrative examples about sustainability related programs. So how to disclose sustainability related government activities. So related to green bond issuance, related to carbon tax, related to investment in infrastructure to mitigate climate change and tax expenditure. So RPG3 now have illustrative examples of those four sustainability related activities. So you can please take a look and get a better clue of how to identify the performance you want to report to your citizens, and what kind of performance indicators should be selected, how to organize those performance indicators, and make all those information comparable to prior years and to other entities as well. By making the consistent, cohesive, and comparable information, generate those information, we can actually make all this financial information become more useful for accountability purpose and also for better decision making in financial management. I'm afraid I spent too much of time, but I'm going to wrap up my presentation at this moment. Thank you much for your attention.